Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these investment opportunities and sharing them with everyone in the community. I do dive pretty deep into both the technicals and fundamentals, make sure that everything lines up together and shares that with everybody in the community. You can see the coupon code special in the corner there. It both works. It works both on the monthly and yearly memberships. So the Great Marquee, it says US 30-year breaks out. Consequences are coming. It's not like we didn't know that there was a high likelihood that interest rates are going to continue higher. We've got the 10-year yield that's broken its 40-year downtrend line, and we can go over that here real quick so everyone can see it. I usually put the line there so it's a little easier to see. And again, you can see that the downtrend line, let me see if I can get this a little bit better aligned here for what we're doing. There we go. A little bit less there. There we go. There we go. There's the setup there. We got our big long-term downtrend line. Not that, but drawn in there. That's broken the downtrend, and we're in an uptrend right now. Right where this green line has basically broken out from its downtrend, shoulder, head, shoulder, bottoming pattern, broken on out, and we're moving higher. Again, that's going to have a lot of ramifications for assets. As these go up, I think that financial assets like the S&P 500 and NASDAQ and tech stocks will get a headwind. Commodities and precious metals, tailwinds. And the bottom of the cycle, we can see it clear as day in the commodity to stock ratio. This is all going to start to turn, guys. And then the big money will be made in precious metals, in mining companies and commodities. It's just slow to do it. People think that this happens overnight. No, it takes years for this to turn and move, and for people to realize that something has changed. We just went through 40 years of declining interest rates. 40 years. That is ingrained into every single living human being on earth today. And that's about to change. That mindset will change. The assets that are outperforming and will eventually underperform in the future, those will change. And it just takes time for everybody to change. The Happy Hawaiian says, "Goodness, miners are about to rip shorts' faces, aren't they?" They are. They are. The miners are about to rip, and I know it may not happen. I think we're already ripping in a lot of different mining companies. Some are just starting to break out of big patterns, big falling wedges and stuff like that. So it's not about the day or the month. It's about the sustained trend. And you're still going to get up days, you're still going to get down days. It's not like it's just going to go straight up like an elevator. It's going to go up like stairs, stair step patterns, consolidations, takes time. And then we'll get a gigantic bull market out of this thing, probably bigger than what anyone has seen that's living. Yeah, maybe some people saw the 70s. Yeah, there's probably some people still alive who saw that, but for the most part, most people who are living and working, they haven't seen a bull market like this. It's coming. It's coming. Paulo says, kind of amazing cracks. Dated Brent and time spreads are all exploding here, and nobody seems to care about oil. Looks like he got bit by the oil bull bug a little while ago. I've been a bull for a really long time. I'm still a massive oil bull, and I'm just waiting for all these people to kind of wake up and for the money to rotate over into commodities. Oil is going to be one of the best performing sectors in the market. Precious metals, I think, will also be a very, very good performer. I think silver, perhaps platinum, they could be the best performing commodities. Gold will do well, oil will do well, uranium will do well, nat gas, coal, they'll all do incredibly well for what's coming in the future with increasing interest rates, higher energy prices, inflation. Everything's going to look pretty good. Here's Adam. He says, perhaps one of the cleanest indicators of the health of the U.S. Consumer. It says Amazon Prime Day spending down 14% year over year in morning hours. Yeah, but what's going on with copper, buddy? What's going on with copper? Can we have copper go up and the economy go down? I don't know. Are the shortages and the supply so jacked up in copper that we could have copper prices go up during a recession? I'm not so sure. A lot of the algorithms, a lot of things are written where if you see certain indicators going down, that it sells copper and other commodities that are inflation sensitive, that do well when the economy does well. Now, a lot of guys they talk about these indicators. I don't know if this is an indicator. I don't know if this data is worth anything because all you have to do is go look over at copper, and we'll look at copper here shortly. Lynn Alden. So here's another thing going on. Trump imposing a 50% tariff on copper. It says you can't relocate copper mines. So one might wonder about the purpose of copper tariffs. Yeah, what is going on here? What exactly is going on? I mean, copper's ready to just rip. We had a big move and it broke out of its pattern, but it was going to rip before this. So, what's the purpose of this? What are we doing here? We can't relocate copper mines. Why the tariff? I don't get it. Oops, there it goes. Whoop, there it is. No, this is copper breaking out. It's ripping through its last nice little trend line we've got going here. Very similar to what gold's doing. Gold's our leader, has a very similar chart pattern to this, kind of a rising wedge that's breaking to the upside, and copper's now following. What makes you think that oil isn't going to follow, or a lot of these other commodities? Silver sitting on top of its pattern, that thing is ready to rip. In fact, most everything I look at that's commodity based looks pretty much ready to rip. Copper, no exception. Now, there isn't a ton of ways to play copper, in my opinion, that are that great. There's a handful. A lot of the big boys, they're going to be looking to acquire copper mines, which there isn't many of. And I would suspect that their production is going to be under pressure. Very similar to the big oil majors like the Exxon Mobils, the Chevrons, the BPs, the Shells. I have a feeling that their production is going to be under pressure as well. Just because they're so big and there just isn't that much oil out there or copper or whatever else there is that you're looking at in commodities. It's going to get tougher and tougher to grow production with time. Saudi says, I control the oil market. So it says, in essence, the Saudis have to walk a fine line here. They need to increase production just enough so that oil prices don't move meaningfully higher. They also can't increase production to the point where global oil inventories build and much lower prices on the horizon if they do that. I'm sure that they'll get it all right. If they produce too much, we'll just cut back a little bit. If they aren't producing enough, produce a little bit more. Now, at some point, I don't know when that point will be, they're going to say, well, just produce a little bit more. And they'll say, we don't have any more. That is when the time comes where prices won't just go higher and stay higher. Um, there's going to be a lot of money flows. A lot of money flows there's a lot of misallocation in the market if that occurs. What that means is that prices are too low, interest rates are too low, most likely. Interest rates and oil prices generally move together. And if we get that type of epiphany in the market, we're going to figure out just how valuable oil really is. If we can't grow world oil production meaningfully over, say, the next like 10 years, we could see some pretty crazy stuff in the markets, I think, in oil specifically. And I think precious metals will be a huge benefactor if oil prices and interest rates go up dramatically. Reason being is people are going to start to question the bond market. They may even question future valuations on all financial assets. Like that's how, it could be pretty meaningfully, a pretty meaningful revaluation of all these different assets in the market. And precious metals, since there's no third party risk, counterparty risk, um, we could see a complete revaluation of precious metals, just all of them. And I think it will. I think it's coming. Eric Nuttall says U.S. oil production needs 440 active rigs to stay flat. With each rig, about 10,300 barrels per day of annual production. $60 WTI implies a rig count of 320. 1.2 million barrels per day of annualized losses from current levels over a year. The next oil bull market is sooner than you think. So we need 440 to stay flat. 60 implies 320. And we're going to lose 1.2 million barrels per day of annualized losses from current levels if the price stays low. Drill, baby, drill. I don't think so. I don't think so. Joseph Brown says if only there were large scale experiments completed within the same culture to compare capitalism versus communism. Like a border drawn down the middle of a single country with one side communist and the other capitalist. Maybe East and West Germany or North and South Korea. And obviously he's joking because capitalism smokes communism. It's pretty obvious. Pretty obvious. Investment wisdom. We got Howard Marks. To achieve superior investment results, your insight into value has to be superior. Thus, you must learn things others don't, see things differently, or do a better job of analyzing them. Ideally, you want all three, if you can do so. Coming down, Unusual Whales. $100,000 salary in January of 2020 has the same buying power as $124,353 in April of 2025, according to the U.S. Bureau of Labor Statistics. So a 24% increase over those 5 years is what they have calculated. So probably, maybe, it is far greater than that because they do a whole bunch of massaging of the data to get a number that's usually quite lower. Freight futures AM update, dry bulk Capesize is down 1%, Panamax up 4%. Tankers are both flat for VLCC and Suezmax. Here's Grady. He says, bias is a strong emotion. Many said and say that technology stocks will continue to outperform precious metals miners. That is how we work. The mind makes you think things will go on as they have forever, but charts do not lie. The ratio chart below shows the gold miners reversed the big picture trend versus the leading tech sector already 17 months ago. The chart talks about global capital flows changing from there on. A historical sector rotation is now in the making. Catching huge trend reversals, major lows, and sector rotations early is one of the pieces of the puzzle to making the really big gains. The largest percentage gains are always from the very lows. Profit is made when you buy. This is the kind of quality you can expect with him. So here's the Huey versus the Sox. It's broken out. We've been broken out for a while in this falling wedge that we have broken out. So Huey is the gold miners versus semiconductors on a 17-year chart. We have a 17-year perfect bullish falling wedge saying historical global sector rotation and change of capital flows is in the making. The untouched black arrow added at the very lows, indicating a breakout backtest and a move higher. And we're seeing this across the board in a variety of different commodity companies. In fact, this pattern, the shoulder head shoulder, that's showing up at coal companies and lithium companies and all sorts of other companies. And we are playing that through the website of those companies in these falling wedges with double bottoms and inverted shoulder head shoulder bottoms. We have a big move that's ahead of us. According to him, it could be 5,000% increase of outperformance of gold miners versus semiconductors. But guess what? People don't believe it. They say, not until I see it. And then when you see it, your gains are already gone. A lot of the gains, not all of them, but a lot of them. Prices are unlikely to drop dramatically as there are still too few homes for sale, says CNBC. But I think that was the last one that I talked about last time. So we'll stop it there. That's all I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is that coupon code. And that's all I've got for today. We've got a midweek update that's being released today. Go check it out. This is where I share my opinions about individual companies to everyone and what I think are the best setups in the market. But that's all I've got. So we'll catch you next time. This is Finding Value.